Hello everyone and welcome to the PivotBoss Closing Report for February 17th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the ES and other futures contracts. Here we see the ES in a daily time frame. We have essentially reached our primary objective here to the upside, which was 1921s, the HVN here. Ever since we rejected off the zone, the implication was that a rejection off of 1804 to 1811 would lead to a move back to 1921s and perhaps even a move into 1939 to 1950 half. So I still believe that there could be a little more upside here into about as high as 50 half, but overall, given the recent trading range down here, if prices don't see acceptance above 50 half or 1930 half very quickly, you're likely going to see another rotation back into 1800 to 1814. So right now we've seen the first part of this thing play out. Very solid 3.5, 4-day rally off those lows. Now what we're looking for is any early pullback toward 1900 is likely to be defended for a continuation toward 1939 half to 1950 half. Eventually we'll see some sort of rejection that occurs, and at that point we will update for the next move. But right now we still have further upside targets to play toward ahead, and we'll be looking at buy the dips basically in the upcoming session. So if we take a look at that in the intraday time frame here, this is a higher time frame volume chart, 50,000 volume bar chart. You can see down here where price bounced off those 1804s and rejected significantly and walked its way all the way back up. Now sitting at 1921. Here's 39 half. So we could see a further continuation into that zone. We've already basically exhausted this key range here, but it was very, very important in diagnosing the squeeze early on. If you recall, 1822 to 1855 was our key range, and price was holding below that zone, failing to get beyond the 50% range, and that led to the initial squeeze into 1855, and then the continuation toward what currently is the 200% expansion target of this range. So big time move, all based off that key range. I'm going to take off these and draw the most recent one as it develops, but right now we don't need that key range much more. Basically what we're looking for is a continuation higher, and right here you have an LVN in two locations, 1912s and basically 1900. So a rotation into 1912 offers the first zone to identify for a buying opportunity into 1939. Additionally, if price pushes through 1912s, anywhere in the 1900 zone, 1897 zone offers an opportunity to defend for one final squeeze higher at least. Otherwise, if price continues higher, we'll see how that rejection occurs. In this case, it was a higher high and a failed push, and then from there, all returns to 1921 were offered. We captured it that day, and that was when we called for 1811s. After price came into this zone, we were looking for this thing to bounce back up, and you can see the trading range has been in full effect right now. So currently speaking, we are at the upper end of the zone, but we could see one final push into those tops and those highs before something materializes. Now if we take a look at crude oil, this has been a clear downtrending market here. We've seen pullbacks be defended this entire time within the stacked and slope environment. So pullbacks into the trigger zone of the pivot-based EMAs have been areas to defend and sell. So every time price pushes into that zone, it's been an area to defend. And right now you see price pushing into the trigger zone between the first and second moving averages in the three stacked averages. This one is the trending average here. These two offer a trigger zone, so a pullback into this trigger zone offers an opportunity to defend. Additionally, that trigger zone coincides with the previous week's high price of 31.38, which has meant a very solid area to defend for bears. The problem is bears haven't been paid just yet. That means that there are now stops beyond 31.38 and perhaps beyond this 31.80, which was MCVPOC and has now been updated, so that needs to be updated to the highest peak there. But overall, if price can't hold below 31.80, we could be looking at a continuation and a squeeze back toward 35.25. So right now, we've been in a clear downtrending market. Typically speaking, within this downtrending market, all pullbacks have been sold, and you can see how long that trend has persisted. The one thing that has me weary just is the fact that we obviously had one session here where price was below that low. And anytime that happens, it's almost a surefire bet that you're at least going to test the midpoint of the range. So right now, that's what I mentioned. We have two highs here. That tells you that there's two sessions here where bears are defending. However, those bears aren't getting paid. Price isn't going down. So this could be susceptible to one more final push higher into that 33.43 level, which could then become the next zone to defend as a bear for a rotation back down. So we'll see how this continues to play out. Overall, the previous week's high is the zone to defend right now. Above that zone, targets 33.43. Taking a look at the intraday time frame for crude oil, you can see here how prices have played out recently. We saw the drop below the previous month's low price here, how it held and then snapped back above and rallied into the previous week's high, and it's currently being offered. So right now, prices are just holding between the previous week's high and the previous week's close. Overall, this prices have continued to be in a downtrending market, so every time we get back toward this type of line here, you're seeing how cleanly this has been rejected over time. So we're right back at that zone right now, and as a matter of fact, there's a clear LVN to watch in the chart right here. That LVN is going to come in right at, call it 30.33, 30.35, somewhere in that zone. That's going to be very, very important to hold here short term, because if price can't hold above that area, that could be the early sign that we drop back toward recent lows and perhaps drop into new lows ahead. So this is going to be very, very important. Above 31.38, squeezes back to 32.90 with a shot to C34s. Okay, let's take a look here at the gold futures contract. Obviously, we had our very clear squeeze that we were looking for here. We had just a significant squeeze, unlike what we were even expecting. We were looking for a move into 69s originally, then upward revised to 92s, and then from there, this thing just blasted off, and we were looking for a blow-off top at that point to mark a high. And that's what we got, 300+% of ADR on this session here. Then we had a little digestion day here, and that is basically when we mentioned that basically a pullback to 1200 could be seen, and that's what we got. Now we're seeing the same type of pattern develop in the opposite direction. So we're seeing the rubber band get stretched too far this way, and then price kind of holding here and digesting this upcoming day. That could lead to a squeeze and a retest of recent highs between 1252 and 1263. So right now what you want to see is a pullback to 1200 or 1205 be defended by bulls for a shot at 1239 and higher. Failure to hold above 1192s here opens up a return back toward 1164 and perhaps all the way back into 1126, which is current composite VPOC. Actually, it just shifted up, so 1196.50. So right now we have two twin VPOCs at play here. So again, if price can't hold above 1192 in that current VPOC, that would imply a continuation back to the lowest HVN below 1126.10. Let's take a look at the intraday time frame. Looking at the intraday here, you can see how price is coiling up, right? Previously, we were looking at this pattern here and these price distributions. You can call it a head and shoulders if you like. But violating 1232, we were targeting 5-day VPOC previously here. That's where we currently shifted back down towards. So we got that clean move and actually surpassed it, and now we're chopping around it. Why? Well, if price can't hold above these levels, especially after a shift up, and value goes offered, the suggestion is that price is going to come back to previous value and then go back into a rejection point beyond it so that it can snap back to value and chop around that zone, because this is prior acceptance. And now prices have been chopping around the zone for some time, and we have a very clearly coiled range. I would say above 1215 likely squeezes back to 1238 with a shot at retesting 1263s. Although 1238 to 1243s obviously offer a better zone to take profits. Failure to hold above 1200 opens up a return back into the previous week's low price. which is going to be 1164 half. So basically we're coiling up right now. We're building up that momentum. Failure to hold 1200 likely leads to a quick push into 1164. All right, let's take a look at the NQ. Here's the NQ in a daily time frame. Obviously, this move was very clear off of the 38.93 half key level. That's the August low and that key range low. When prices were holding below their pre-market, we were talking about how if those participants don't get paid, they will become the early trap that leads to this move back toward 42.26. And I mentioned to the trading room today, I thought 42.26 was a long shot to reach today, but that it would likely be reached within a couple of sessions here. So this was a huge day here. And 42.26, the significance of that is that's the middle or the midpoint of the August key range. So if you fail to hold below the bottom of that range, you usually slingshot back toward the middle of that range with a shot to rotate all the way to the top of that range at 45.58. That was the longer term projection that I mentioned based off of this move, and we're almost halfway there. And I talked about before that if we do reach this 45.58, I give it to about the first week of April to get there. So that's what we're looking at right now. But first things first, we got to see how price reacts to 42.26 if it's even tested at that zone. So we'll continue to watch for early pullbacks to ID areas to defend for a continuation higher. While 42.26 is likely to be tested, that doesn't mean it could be the top. We could auction all the way back into 43.11s, which is the last point where we've seen real rejection in this chart, at least on the upside. Now, if we take a look at the intraday time frame here for the NQ, again, this is a higher time frame volume chart, 5,000 volume bar chart. Here's what I talked about before. So if we scroll in kind of to this bottom portion here, we talked about the OTF responsive participant swing absorption signature. We talked about that before. This is when price comes below a key level here, our key level being 38.93 half. Smacks below it, tries to hold below there and can't. It smacks way back above, rallies, and when it comes back to that key level, this is where it's defended, creating kind of a right shoulder type of thing. And what that does is it shows you that this was significant rejection of a major key level. And now you're seeing basically bulls, passive buyers come in with limit orders here, and they're creating higher and higher support levels, and they're absorbing rotations into that price zone, eventually leading to a squeeze that looks like this. So this is what we talked about. So if you go back here and check out what we talked about during the pre-market and closing videos during those times, where we'll mention this, the setup here. And it's more of a signature than it is a setup. It's just identifying rejection here and seeing the price push back. When it comes back to that zone, it's defended, and that's how we knew that we were likely marking our way back toward 42.26, because this was the bottom of the August range there. It failed to hold. It came back and was defended. That usually leads to a springboard type of bounce back toward 42.26, the midpoint, and that's where we're currently headed. So what I mentioned before, these LVNs mark areas to defend. So if price pulls back into this LVN around 41.50, that could be an area to defend for a continuation higher in the upcoming day. We also have what we can use as basically the midpoint of the upcoming session, or the pivot range for the upcoming session. So here's the pivot range, it's higher value. Here it is right there. So dropping into the zone offers an opportunity to defend and buy for the upcoming day, heading into 42.26 and beyond. All right, so we have the primary upside target for the day, currently 42.85 for the upcoming session based off the after hours open. I expect that to move as price pulls back in our favor. All right, that's it for now. Let's see how this thing plays out heading into the upcoming session. Good luck and trade well.